for more on regulatory reform and markets outlook and where you should be putting your money these days. We turn now to Jon Burnham, portfolio manager of the Burnham Fund and chairman of the Burnham Financial Group, which is more than $3 billion in assets. He is a supporter of the Dodd bill, but says it remains to be seen whether it will be passed. I think a lot of people, Jon, probably agree with you. Great to see you back on the program.
Thank you for having me.
I want to ask you a little about history and your experience being involved in financial markets over the years. Drexel, of course, was at the forefront of innovation at its time. What lessons did you observe in its collapse, and what do you think should be applied for this generation with our current troubles?
Well, the Drexel-Burnham situation was very different. It didn't collapse because of any misuse of the products that it had created. The major one, of course, was junk bonds. That market today is way bigger than it ever was then. The problems that Drexel-Burnham had at that time had to do with what I regard as poor management and Mike Milken's particular individual troubles, which dealt with him personally rather than with the firm itself.
But there's a lot of question today about transparency and accounting and a lot of finger pointing. So in a sense, you have all these financial products, but it's people executing the trades. So maybe it's also a problem of bad management.
Well, I guess you could
Bad
say
decisions.
all of these things are bad management, but I think the major problem that we've had the financial troubles now is the tremendous use of leverage that all these banks and the large brokerage firms were doing, trading firms, where they're borrowing 30, 40 times what they were lending, and that was that's really what created this whole situation. And
then all the fancy financial products, the CDOs,
a lot of these products,
the derivatives.
Most people don't understand what they were.
But what does that say to you about financial innovation? Because don't you want that to continue? But it seems like we got into trouble with, as you're just describing, with these things. I mean, how do you inspire, the creation of new products and new ways to invest? Do you run into these questions, challenges at all in your own business today?
Not so much in my own business because we have a small money management firm, but we need to have regulation of these products. Nobody wants to stifle the creation of new products, but there has been a tremendous lack of supervision of these products by government agencies up until now. So when you say I support the Dodd bill, I don't know if I actually support the Dodd bill per se. I support the fact that we need to have a bill that provides much more oversight and much more care in finding out what these firms are doing, what these products mean, controlling the leverage that's involved, and so on and so forth.
So are there particular issues within the Dodd bill that you like more than others? You said you might not support it wholly. We don't have to go through the details of it, but I'm just curious for anything that might concern you most.
Well, I don't agree, for example, that the major banks should not do any proprietary trading. I think that's ridiculous because they have to do proprietary trading in order to make markets in bonds and government bonds and lots of other products. So that doesn't make a lot of sense, and I don't think it'll happen.
All right, let's talk markets here. Stocks look pretty good, and your fund, from what I understand, has been beating the S&P relatively consistently.
Yes.
So what's your trick these days?
Well, no big trick. It's just that we made some good picks of stocks, and we were smart enough, luckily, to get into the market in March of last year after.
Here's your fund over the last year, 42% return. Nobody's going to sneeze at that.
No, it's okay.
So what's your method for stock picking?
Well, right now, the stocks that I'm really looking at are very big name companies that are selling at what I think are very, very low prices, certainly on a historical basis. For instance, Citigroup, which everybody sneers at, and we all know what the problems of Citigroup are, but it now sells a little over $4 a share. It's down from around 50. It's, of course, 40% owned by the government, but the government is going to get out of Citi one of these days. I doubt if it's going to be at a price of 4. I think it'll be higher. The government will end up doing okay, and I think over the next few years, there's a good chance that you'll see Citi selling at $8, $9, $10 a share.
What else is looking cheap to you right now?
I also like General Electric for much the same reason. It's been under a cloud for a long, long time. It's already up from $7 or $8 a share, but this is a great company with worldwide products that are in great demand, and the GE Credit's problems will get resolved. In the meantime, the stock sells at 18. They've already said they're going to restore their dividend next year. I think it's attractive,
and
with very little risk.
Last we spoke, you were big on Apple, too, which has had some news, right, with the introduction of the iPad. And let me go ahead and pull up that quote, too. Is this still one of your favorites?
Yes, it is.
To get into today at $225 a share?
I don't know if I'd get into it today. I would wait till the iPad is going to be introduced in early April. And very often, these stocks sell down after it's actually introduced. So if it sells off a little bit, and then a few days after that, then I would buy it.
You know, we just were talking to Kathy about the IPO market heating up. Is this something you keep an eye on? And what is your outlook there?
Business?
IPOs, the initial public offering. Yeah, I'm sorry. I muddled through some. Sometimes I talk way too quickly. I apologize for that.
That's okay.
Do you look at any of these IPOs?
Well, there's one IPO that I will look at very carefully, and that'll be General Motors when it goes public again.
What do you think for a time frame on that? They seem to be getting things turned around.
I think they're getting things turned around. I think that stock should go public possibly later this year or next year. I think it'll be one of the hottest deals of the decade.
As far as risks, again, another story today we're following, developing story, Greece. Concerned about market contagion. You know, we've seen some volatility related to what's going on in the Eurozone.
Well, sure, I'm concerned about it. You know, there's nothing really good about these countries having problems. But I think they'll get resolved. You know, I'm not obsessing over it. And we've been through these things before. We've had countries that were in serious trouble before. I'm not that concerned about it. I think the stock market here is in good shape.
Okay.
And I expect it to move higher.
Mr. Burnham, got to leave it there. Jon Burnham, chairman of the Burnham Financial Group. Always a pleasure.
Thank you very much.
Thank you.
Thank you, Laurie.
Wonderful.